Peace. Welcome back to the Absolute Boss Collective. We kicking off episode 4 of the Let Us Begin series. And in this episode, we're going to talk about how many stocks you should own and how many stocks you should start with. Okay, so this is basically for the new cats out there who want to get in the game and just want to know, like, how many stocks should I, try to build my portfolio up with. Okay, now before we get into all of that, if you're new to the channel, consider subscribing. Turn on your post notifications. Most importantly, get with the guard. Ask a question. Okay, leave a question in the comments. Okay, this way I can speak directly to you and you can figure out how you want to play your part in this game called the stock market. Okay, now without any further ado, we're going to get right into the topic of how many stocks should be in your portfolio. And I'm going to set it off with a quote from the big homie, Warren Buffett. Okay, everybody quotes this guy, everybody talks about this guy. And one of the things that he said was fortunes have been made off of Coca-Cola, ticker symbol KO. So what that's saying is you can start with just one. Okay, it does not matter how many stocks you start with. This is for the new people out there. So long as you start, you have to start somewhere. Okay, so with that quote, fortunes being made off of Coca-Cola, obviously, if you know Buffett's history, he bought back in the days, he bought at a very long price, and he played the long game. He just held. Coca-Cola is a dividend-paying stock. So based on how many shares you have, you're getting paid a certain dividend on that, and you just keep building that position out. Okay? Many of us do not have that luxury. Now, the downside to starting with one stock is that, Coca-Cola could go out of business, and this is a far-fetched theory, obviously, because Coca-Cola's been around a long time. Yet and still, when you're dealing with one company in one sector, in one industry, something can happen. You know what I'm saying? What if they had, a botulism outbreak? I don't think you can get botulism from soda. Let's hypothetically, that could happen and that can affect that one stock and hence affect your portfolio, your money. Okay, so we're going to discuss all of that also. Now, to speak directly to the question that came from my homegirl Kiki, who asked how many stocks I should start with, there are some people out there that say you should have between 20 and 60 stocks in your portfolio. There are some that say you should have at least 10. Okay? It all depends upon your time horizon. So if you're a day trader, if you're trying to trade 20 stocks in one day, that's damn near impossible. This is why if you peruse my channel and look at the $500 challenge, I have 39 episodes of that. And in all of those episodes, most of those episodes, I am trading the same thing. Now, if I try to trade 20 stocks on a day-to-day basis, I'm not going to be very successful because there's so many things you need to watch for to place a trade that it's hard for two eyes to keep track of 20 different symbols. Okay? Now, that's for trading. For investing, okay, you might be able to do 20 or 60 stocks. It's still a lot of homework involved as far as researching that company, researching that sector, their earnings, okay? Do they have a moat? You know what I'm saying? It's so many different things that you have to study. Okay, so having 20 or 60 stocks is just a lot of work. You gotta love what you do and you gotta commit time to it. Now, this is what other people say, at least 10. So if you pick 10 different companies in 10 different sectors, okay, that's even going to be a lot of work. Some people bring it all the way down to 5 stocks. So for anybody who's interested in getting started, I would suggest that you start with as many as you can handle. What I usually tell people is pick 5 stocks. You have 5 business days in a week. You can commit each day to one particular stock. I'm going to watch this stock all day. I'm going to do research on this stock all day. Okay? And as you get familiar and you get used to doing this, you'll be able to do more and more if you love this and you want to do this. You know what I mean? If you don't, let's say you passive and you just want to put your money to work, you don't want to commit time to studying companies and reading balance sheets and studying the CEO's history and all of that kind of stuff. You don't want to do that. You just want to get involved. There's ways that you can do that as well. Okay? And the most important thing when you're talking about how many stocks you're going to look at, how many stocks you're going to follow, how many stocks you're going to buy, is you have to know and understand that company. But if you don't want to do that, let's say you like finance and you want to invest in financial companies, okay? The Fed just hiked by 3/4 of a point, okay? And banks, they charge interest on loans and credit cards and all of that. So you can look at that and say revenue is going to go up in the banking sector. Now, there's a bunch of banks, mad banks, as we would say in hood parlance. There's mad banks out there. How do you know which bank is the best? Okay, maybe you like me, a high school dropout. You don't got time to figure out or necessarily have the book smarts to know how to select which is the best company. Then you could do something like purchasing an ETF. An ETF that tracks the financial sector. Okay, I'm on the grind right now. I just looked over something like 75 stocks, right? And one of the best performing stocks of last week was a company that I follow, that I'm interested, that's on my watch list. It's called Bank of America, ticker symbol BAC. So that's how I know the financial sector is kind of strong right now. So if you want to get a piece of that, you can pick the individual banks like JP Morgan, ticker symbol JPM, or Wells Fargo, ticker symbol WFC, or you can just buy the ETF, XLF, that tracks the financial sector. Okay? So another industry that's hot right now is energy. So there's so many different energy companies. You can go and try to pick these little energy companies, okay? Or you can just get the XLE Energy ETF, which is going to have a basket of energy stocks in. So what I'm driving at is diversification, okay? That's going to be the strength of any portfolio, because with there being different sectors and different industries, right? When one industry suffers, for instance, the one that's suffering the most right now is tech. The ETF that tracks tech is XLK, right? Let me make sure that's right. Yeah, XLK, right? So now let's imagine that you had a portfolio and you took your money, $1,000, and divided it into these 3 sectors. Okay, you have the financials, XLF, you have the energy, XLE, and you have technology, XLK. So why tech is getting beat up The other sectors are performing better. They're either holding ground or they're actually gaining in this ugly 2022 bear market. Okay? So if you divided that $1,000 up evenly, $333 and some odd change in each individual sector, even though you getting killed in the tech sector, the other ones are gaining, and then you're able to weather the storm that's going on right now. So whether you decide to use ETFs, sector-based or industry-based ETFs to diversify your portfolio, or you're using individual companies, which is going to be more work and which is a little bit more risky because you're betting on this company being successful. Whereas an ETF, you have a basket, a group of companies in that industry, and the positive would outweigh the negative, okay? Because somebody is managing that fund, okay? So these are some of the things that you need to think about when you're selecting stocks. Anybody that's getting started, tell you start with 5, do 10 if you can do 10. The more you diversify, the stronger or the more wherewithal your portfolio will have in challenging times. And this is why people were saying 20 to 60 stocks, because, some of them is going to be doing well, some won't. And, if you pick some winners, it can outpace your losers. So that's the point. Make sure you guys are looking at companies in different. You don't want to be putting your money in NVIDIA, a chip company, putting your money in NVIDIA, and then putting your money in AMD, and then putting your money in MU. It's all in the same sector. So if the chip industry is doing bad, your portfolio is going to be horrible because you're in the same sector. So you want to spread it across different sectors and different industries. So when you identify companies that you like, look and see what industry is in. And you say, okay, I got a tech company. Now go look for something in finance. Go look for something in healthcare. Go look for something in insurance. And this way, go look for something in commodities. Also, we got different avenues to put our portfolio in as opposed to just stocks. You have stocks, you have bonds, okay? You have mutual funds, you have crypto. So any well-balanced portfolio is going to have exposure in all of these different areas, and that's what you want to replicate. Okay? So I will that this information will help you decide how many stocks to choose and how to get started. The best thing you need to do is start. Okay? This is your brother in trading and investing, signing off for the Absolute Boss Collective with the man, Marcus Garvey, in the background, signing off. Peace.